Welcome to S&P Capital IQ's monthly loan market overview clip. I'm Steve Miller of the Leverage Commentary and Data team. Over the next few minutes, we'll review recent market trends. In preview, the leveraged loan market rallied in July in response to improving investor sentiment and better technical conditions. With loan prices up, the S&P LSTA index posted a 1.2% gain in July, its best performance since January. That pushed loan returns for the first 7 months of the year to 5.75%. The loan market's July rally was part and parcel of the overall capital markets bull run, spurred by a combination of encouraging news out of Europe and a series of better-than-expected U.S. economic reports. The S&P 500, for instance, jumped 5.4% between late June and the end of July after dropping 7.3% in the spring. As has been the case all year, loan prices track stock prices on a slightly delayed basis. Better technical conditions also lifted loan prices in July. For one thing, loan mutual fund flows turned positive during the month. For another, CLO issuance, though down in July, beat expectations. On the other side of the technical ledger, supply slowed. The S&P LSTA index added $2.3 billion of net new loans, down from $6.5 billion in June. Moreover, the calendar for new syndications in August is characteristically light. Rising demand and dwindling supply drove new issue clearing yields tighter in July. On average, arrangers printed institutional loans at 6.6% compared to 7.1% in June. Drilling down to rating categories, BB clearing yield straddled 5% in late July, with B plus B1 paper in a 5.5 to 6.5% context and B2 paper bracketing 7%. With the new issue market more issuer-friendly, dividend financing surged to a 4-month high of $6 billion in July. Issuers focused on loans arrangers observed rather than bonds in order to preserve the ability to repay. The default rate was steady in July at 1.04%. Looking ahead, managers estimate that the loan default rate by principal amount will end 2012 at 1.8% and then rise to 2.8% in 2013, according to LCD's latest quarterly buy-side poll taken in mid-June. To wrap up, 2 final points. Looking ahead, market participants expect LBO deal flow to increase starting in mid-September as a recent round of auctions generate new issue paper. As for demand, players are loath to make predictions amid all the uncertainty around the globe. Clearly, the outcome of the U.S. elections and the ongoing debt saga in Europe will significantly influence demand for a risk product, including loans. That brings us to the end of our overview. For more information on the loan market, you can check in with us on the web or via LinkedIn, Twitter, or Facebook. The links for each is in the description below. You can also download this presentation at slideshare.net. Finally, a quick plug. If you haven't already, please consider joining the LCD Leverage Loan Group on LinkedIn. The group recently crossed the 9,000 member mark, making it far and away the largest digital forum in our space.